From the morning reading, Diamonds Q's new high as Spider and IWM pause. Tesla gains after hours. Breadth weakened compared to the prior session as decliners led 1653 to 1313 on the New York Stock Exchange and led 1674 to 1097 on the NASDAQ. In other reading, the Dow climbed to its 9th straight record. Going back to 1897, the index has accomplished such a feat only 5 other times. The momentum persisted in the months ahead every time with impressive returns, but when it ended, it led to 2 crashes, 1 bear market, and 1 stretch of choppiness. It has caught Wall Street by surprise. The incessant rally has caused the S&P 500 to exceed strategist estimate for the S&P's year-end close. This is one of the few times the index has taken less than 3 months to exceed the expected gains for the entire year. 3 of the others suggested the price rise was too far, too fast. The other was in 2013, which just kept going. Nitpicking on breadth, the S&P has spent the past 4 days within 0.15% of a yearly high, but the up issues ratio has been 47% or below 3 of those days. The last time that happened was January 9th, 1973, the peak before the 48% bear market. Of the 5 total times it has occurred, returns over the next 2 months were flat or negative 4 times. The dates were 1/15/64, 4/22/64, 5/3/65, 10/22/65, and 1/9/73. Something keeps driving uncertainty. We noted the increasing correlation between the S&P 500 and the VIX last week. It keeps climbing even on a 3-month time frame. The correlation has climbed to the second highest level in 17 years. The other was during the rally of the August 2004, January 2005. By the time the correlation got as high as it is now, stocks declined into April before the rally resumed. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:48 a.m. Mountain Time, and I'm recording this in preparation for the market day of February the 23rd, 2017. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And at the time of this cut, all 4 of the U.S. broad-based indices were up just above scratch. Crude oil's up big, 1.8%. Euro's at scratch. Long bonds up about 0.25%. Gold up about 0.9%. In overseas action, it looks like all the markets we follow are open. China down about 1/3, as is Hong Kong. Japan at scratch. Germany and United Kingdom at scratch. In terms of macroeconomic reports for today in the United States, of note, you have the weekly unemployment claims, and that's already been released at the time of this production. You have nat gas storage, crude oil inventories. That weekly report has been pushed back from its usual Wednesday to today. And then you also have the FOMC member Kaplan speaking. And looking forward to tomorrow, we have new home sales and University of Michigan consumer sentiment. In terms of current volatility conditions, short-term VIX 10.39, skew continues to be elevated, though not quite as high as it has been in some recent sessions, coming in currently at a 138. IV percentile still in that bottom quartile. The S&P at a 14, the Russell at a 13, the NASDAQ at 6, and the Dow at 28. No standard deviation size moves were put in on any of the 4 U.S. broad-based indices yesterday on a close-to-close basis. Let's go ahead and take a look at the charts. And on the S&P chart, you see the breakout continues and continues to build. Really nothing in the short term or intermediate term that is anything but bullish. Really, the only questions at these kinds of points in the rally, and you heard a lot of the sentiment from the morning reading, is how far can this go and what's it likely to be the outcome. Sometimes when you get such a huge rally, the outcomes can be pretty ugly themselves, as the retracement is also gargantuan size. So that's kind of the scary part, but right now there is nothing to say that this is over with. The Dow also the same. In fact, in the last night's session, and frankly right now, we're at new all-time highs on the overnight session. NASDAQ, also new overtime highs currently being pushed in the NASDAQ. Nothing here that is anything of a hint of bearishness. The Russell. Russell's, of course, been the most sideways one of late. It did break out of its long-term range finally, just to go into another sideways pattern. Very incremental new highs being put in on the Russell. In other markets, crude oil has been moving and was probing the breakout a couple sessions ago and kind of been chattering, but right now again probing once again, trying to push up towards 55 and beyond. And then gold also pushing up, and right now is exceeded its recent swing highs, so we now have a new higher high on gold. And if you look at this, since the trend break, we've had a higher high, higher low, higher high, higher low, higher high. We now have an intermediate term trend that's above the cloud and a series of higher highs and higher lows. So both the short and the intermediate term trend on gold is considered to be bullish. And the dollar, of course, is playing a role in this, and the dollar is down, though still overall neutral in the cloud on its intermediate term posture. And then bonds. Bonds also neutral in the sideways consolidation chop that it's been in for over 2 months. It's a bit of a move up today, but still the overall picture is one that is quite neutral and quite choppy. And, this is probably just noise until we get something more that breaks out. Now, one thing I'm starting to notice here, give me just a second to put a couple drawings up here. I just saw this. We might be starting to get something of a triangle forming. You notice how the highs are lower and the lows are higher. We're starting to get something of potentially a symmetrical triangle here. Now, this is something of a coiling pattern. And you notice we still got a little bit of room. We could go another month before we get towards the apex of this thing. But as we get deeper into this triangle, if this continues to coil in a smaller and smaller pattern, that could be the sign for the impetus to the breakout. And the impetus to the breakout could also signal when the correction in the overall indices could come. So we'll watch this. This is still very early, but bonds are thought often to be the smart money and often to drive the equity market. And if this indeed were to break up, and that could be correlated to the time in which the equities finally stop their rally. So we'll watch this. That's kind of an interesting development there. And then also volatility. Volatility continues to be extremely low. Right now we're playing below 12. Everything below 12 is by definition extremely low. Even 12 to 15, which right now 15 would seem to be a huge pop. But even up to a 15, that's just normal bull market kind of chatter. So this continues to be exceptionally low. There is no fear of any significance being priced into this market at this time. Okay, let's go ahead and bounce over to the daily report. And not a lot of changes from yesterday. Intermediate term phase opinions still market phase 4 extension patterns. The 3 market timing signals, no changes from yesterday. Confirmed uptrend bullish from IBD. The first signal, the second signal from GMI index, a perfect 6 out of 6. Bullish. The stock chart's decision point is mostly bullish. We've had the stack form on the short term and the intermediate term. We're still waiting for the long term to heal itself and give us a perfect stack across all time frames, all indices. That is really the only signal that is holding us up from a much reduced hedge warning status. And the position sizing models, both models at 100%. Intermediate term market postures, all exceptionally strong bulls, supported by a strong bull sentiment line. Nothing of concern there. Hedge warning status remains 0+, normal with some elevated conditions. In terms of strategy opinions, no changes again here. VIX is still below that acceptable threshold to trade and initiate new positions for novice traders in the option income strategies. Keep in mind, when you're below a 12 on the VIX, the premium is quite low. Continue to be conservative in covered call strategies due to how far this rally has come. Initiation of new positions at this point. Might want to consider a 1-to-1 ratio of out of the money and the money strikes. In terms of specific areas of warning, this is very, very low. Really only one warning out of all the volatility indicators, and that's the elevated skew, which is about 135. In the trend-based area, there are no warnings. In the intermarket risk aversion indicators area, this is pretty much we'll call neutral. We have 2 that are barely, or 3 actually, that are barely risk on, one that's outright neutral, one that's barely risk off. Overall, we're going to call that neutral. Sentiment is high, intermediate term sentiment at 8 out of 10, and the fear and greed index indeed also an 80, and this rarely goes up above 90, so this is just about as high as we typically see the fear and greed index. In terms of sector specific, energy continues to be the one sector that is perhaps the weakest in relative terms in the market postures across all 3 time frames. Okay, I think that's probably enough for today. Let's go ahead and go to publishing on this. And I'm going to scroll through these to the disclaimers. If you see something, just hit pause button. And of course, if you need more time to read the disclaimers, hit the pause button. Also note the hyperlink down here at the bottom for the full set of disclosures. In the meantime, manage that risk profile, and that should bring you consistency in your trading. It is truly all about risk. All the work that you do about entries and even exits are secondary to the management of your risk profile and the production of professional type results. We'll see you next here tomorrow for the market preview from Falcon Global. In the meantime, be a great trader.